it's a very interesting set of data. Santa Claus rally, and what exactly Santa Claus rally, and what is the time frame we are looking out for? It generally starts off with the start of the eve of Christmas. That's on 25th December. So we've taken 24th December as a closing prices, extending that towards the start of the fresh new year. That's 2nd of January. And historically, the data is very positive for the indices. That's Nifty 50. We've looked at the last 10 years of data, and as you can see that from 2014 towards 2023, there have been 10 instances, and out of those 10 instances, 9 instances is where the index has given positive returns. What's very interesting is the last 5-6 years of data, and as you can see that the average returns over the last 5 to 6 years is almost 2 to 2.5%. So which means from the 24th closing, which is a day like today, the Nifty generally gives a returns of almost 1.5 to 2.5% on the positive sides, starting towards the calendar year, a fresh calendar year. What's also interesting is that this it comes at a point where many of the global markets, or the scenarios and the news flows across the global markets is generally not considered to be very positive or very optimistic in those last 8 to 10 years. Also, I think the second and the most important part is which sectors they tend to outperform. We've seen FMCG, we've seen IT, and we've seen many of these other so-called defensive sectors. They generally do pretty well for themselves in this kind of a time frame. We've seen banks being one of the better performers in the fag end of the calendar year. So I think on the back of this, we could be at a point where from here on we could be looking at a decent bounce for the index. Even if we go into the average scenario of 2% bounce, we could be looking at least a 500-point rally for the index, which should take the Nifty back above the 24,000 mark.